The eastern half of the United States is facing its coldest winter since 1982. And the Northeast, you might know this, uses about 4/5 of all the U.S. heating oil consumed. Joining us now to discuss this cold winter forecast and its impact on energy prices is Matt Rogers, president of the Commodity Weather Group. Also joining us, Peter Beutel, president of energy trading advisor Cameron Hanover. Matt, I'd like to start with you because back in September, you actually sent some shockwaves through the commodity trading community with your forecast that this would be the coldest winter in at least a decade in the Northeast. Thus far, you've proved correct. And I was actually just looking through your latest note. I'll show everybody. It's nice and colorful. That actually says this winter could not only be as cold as you predicted, possibly more so, and that the freeze might extend out to the west. Tell us a bit more about this, why you've come to this conclusion.
Yeah, we've had good morning, Eric. We've had a very an incredible pattern develop here this winter. We track this thing called the Arctic Oscillation, and it has been the most impressive that we've seen in our lifetimes. It has been throwing cold into North America, Europe, and Asia. And if you look at years that have similar pattern progressions, you tend to still have a very robust, very cold Q1 across eastern North America. So as you see there in those maps, we are expecting a pretty chilly next 2 to 3 months.
Okay, so there is the map. We can sort of, that's the illustration that you've cooked up for us. That is actually for January 2010, as our viewers can see. Matt, I want to ask you this question, that we've got an El Nino. This is this warming effect off the coast of Peru, which typically in the past has led to warmer winters. Why is that not happening now?
Yes, this El Nino is very different from the ones that we had in the 1980s and 1990s. The center of the warm water is much farther west toward the international dateline, and that is supportive of a more colder pattern over North America. So the El Nino's there, but it's not as close to our backyard as it normally is.
Okay, so Matt, I want to move forward and look at February and March because the January map we saw really showed a lot of cold weather in the Northeast. But if we bring up these maps for February and March, you'll see that that purple zone, which sort of indicates the deep freeze, is shifting west, and it actually gets much, much bigger as we move into March. So this effectively, Matt, sums up your forecast. As people look at this, give us a sense of what the risks are to the upside, which is to say, why might temperatures be warmer than you think, and what are the probabilities of that?
Yeah, we still have a very active Pacific pattern, so at times we're going to see occasional breaks in this cold winter pattern. For example, we have one coming here in mid-January just for about a week, so that may occur again at times in February and March. But right now the risks are more aligned to the cold side, particularly in the mid-continent and through the southern U.S. We're still going to be chilly here on the East Coast as well, but in terms of comparing to normal, the mid-continent and south look more prone to seeing the stronger cold outbreaks.
Matt, I'm dying to bring in Peter Beutel here. Peter, what might this, if Matt's correct, what is this going to mean for the energy markets?
Well, for starters, it's going to mean higher natural gas. Natural gas is a much less political commodity, but a much more weather-oriented commodity. But it should also mean that we will start drawing down heating oil or distillate stocks. We recently had a 24, 25-year high there, so we're not coming into the season in bad shape. We're coming in very good shape. But at this point, you know, already on the first day of 2010, heating oil prices made a high that was above anything we'd seen in 2009. So unfortunately, this is going to be working in favor of prices moving higher, and it's going to be taking money out of consumers' pockets. Every penny increase in heating oil cost the American consumer about $2 million per penny per day. So it is an additional tax on consumers.
Peter, and as you know, it is, as we all know, it's important to think of it in the macroeconomic context, but what about people trading oil? We saw oil in the $82 neighborhood yesterday. Where do you think it might go? Again, if Matt's forecast proves correct, and this is going to be a cold winter across the U.S. Through March, where might we see oil go?
Well, that $82 level is the high for 2009. If we break it, we're going to have technical reasons for prices to go higher. You know, I certainly think that we've got a good chance of breaking 85 pretty soon, and I think there's a good chance that we'll be looking at $95 if this weather pattern continues before Valentine's Day.
All right, Peter, very quickly going back to Matt for about 15 seconds. Matt, what is the springtime looking like to you right now?
Pretty variable at this point. Spring is so difficult to forecast. I would suggest maybe a cooler start, but warming up by the second half of April into May.
All right. Matt Rogers, Peter Beutel. Gentlemen, thanks for joining us for this Energy Weather Roundtable.